this is Tom Cloud, and it's June 9th through 2025. And I want to bring today to you 10 reasons why you should consider gold or increase your gold holdings over the next few months and years, as we see a vast amount coming our way of demand. I'll start with geopolitical economic uncertainty. Everybody knows what's going on with Russia and Ukraine and Hamas and Israel. And you know from history that wars have done nothing except make the rich richer, get in all these arms deals and making manufactured planes and all kinds of different artillery. So you look at it and say, geopolitically, this world is in a mess. It's hard to believe 125 years after going back to right before World War I, and we're still haven't learned, and we're still going through this. But what most people don't realize is when all this is financed, it's not like you go to the bank and sign a note. These are acts of Congress, and they just create the money, give it, the smart people come out with a piece of it, and the public and most people don't profit from it at all because they don't have the money to play in that arena. But what I can tell you to do is number one reason, I don't mean the most important, the first reason of the geopolitical and economic uncertainty, investors are just seeking to preserve value during war. They're just trying to stay in a close place, a quiet place with their money, not trying to necessarily double it or triple it, but just maintain it. And that leads us to the second reason, the hedge against inflation and currency devaluation. 1 year ago today, July the 9th, 2024, till today, the US dollar has gone down against the euro 4.78%. Call it 5%. Just think everything you guys been down 5% just because of the amount of paper created. Because remember, inflation is an increase in money supply that causes prices to go up. It's not the prices going up, it's the printing of money and diluting the pot. So what you're looking at there is inflation. Inflation over the last thing has gone up 5%, we just talked about, and now we see all the strong bank demand coming in following the currency devaluation and the hedge. And once again, we've got a strong central bank development. I've been talking about this, those of you who've seen any of my videos in the last year and a half, they'll see me talk about Basel III in Switzerland. I happened to be over there 2 weeks ago, and it's unbelievable. I was in Europe for 2 weeks, and it's hard to believe what's going on. And the dollar, nobody wants it. Not one single dollar would they take, whether I was in Switzerland or whether I was in England or Japan, any of the countries we went to and visited, including Milan, we went to at the last stop. But all these places, central banks are buying gold because they can. Up until January of 2003, they couldn't own gold, central banks. Now, not only do they own it, they're buying it every Friday and increasing their holdings along with India, along with all the BRIC nations. It's us that are not increasing, and we're seeing the fall behind. But most of all, look what gold has gone up. Since January of 2003, the first year of 2003, it went up 10.8. Last year, it went up 29.7, and this year is up 32 or 3%, and we're not even halfway through the year. So look at what the bankers are doing. That's what you need to be doing with at least a part of your assets. If they're going to keep buying it in a significant amount, as they have been, and institutional demand continues to go up, which it will. I mean, why would they not when they can buy it and count it at full value of spot price? There's nothing else you need to do. That real estate, you can only count half. Here, you can count the full value of your gold on your balance sheet. One day last week, we got an alarm that something never happened for the first time ever Everybody living today, anybody's ever lived, had a profit in gold. Now you say, well, I bought it at 3,000 and paid a commission, and I'm not quite there. I'm talking about the gold, the metal. Now just think about that. Whole thing, and everybody was in a profit position. Every person that owned gold. So it's kind of hard to believe that, but it is. So portfolio diversification is a correlation of assets like stocks and bonds and real estate and ETFs and treasury bonds and treasury notes and gold and silver and platinum and palladium, all the precious metals. That's portfolio diversification. It kills me to hear these, people talking about fiduciary. Fiduciary, nobody is fiduciary. They don't buy gold. I mean, you got to have gold to have fiduciary. You can't call stocks and bonds and investing and call that that kind of state. It's not that kind of state. So keep diversifying. It's a great thing to do. I diversify into different areas, and all of you should. All I'm saying is, without question, you should have a good, comfortable position in gold and silver in particular. And look at what has happened to platinum the last 3 weeks. Oh my gosh, we're up 20%. It's just blowing and going, and really it looks like it's going to continue on. So we are getting a lot of contacts on that. The other thing, you guys, the historical performance of is a store of value. You look at thousands of years, and governments, and look at tangible assets is a proven worth. It's defensive against destruction of different things, but once again, it's a play and one reason to own it. It's not the only reasons we've talked about already. Rising price trajectory, my gosh, is it on a trajectory? We're seeing everybody we talked to in England and over in Switzerland last week and the week before, we're saying, man, this is it. I mean, we're in a rising trajectory. Get on the train. It's going a lot higher. They were all just about picking 4,000 to be this year, if not the first quarter next year. Here's gold at $33.33, $3,333 an ounce. And we think it's going to 4,000 this year or in the first quarter of next year. But the main thing is, it's not even going to stop there, in our opinion. It's going to be a trajectory that keeps going up, and we'll have provide liquidity. There'll be more liquidity, more bidding. We're seeing airplanes and jets and bring metals to the United States, put it up for collateral when they want to leverage in the market. We'll see a lot of that. I don't do that. I'm a bullion dealer, not getting into that, putting up $1 million to control 6 million or whatever length contract. But we're seeing that. But you're also seeing demand for banks. And then the latest one announced is another that blows me away. Think how much bigger the insurance industry is in China than it is in the U.S. Now, the Chinese, these insurance companies can buy silver and some gold and buy it and count it just like in the Basel III gold agreement out of Switzerland. So here it is, a much bigger market, and you're going to see them fighting, and a 1% move in the insurance would create $500 billion of value. Is it going to happen? I don't know. Probably so. Since they've already got a footprint of what's going on with gold, why wouldn't they go on and do it with silver as well as gold? So you've got that, and you've got all the reasons. How far out is it till there is no U.S. dollar? It's going away fast. There's no reason to believe there's going to be anything to turn it in the near future. It's not going to turn. So remember, it's the only thing I know that if us call gold, next reason is just having insurance. You have car insurance, plane insurance, every kind of insurance, life insurance, boat insurance, and you hope that you never have to collect on it. You hope it just expires and you pay another year. But what happens when you can buy gold, and we ain't talking about any banking crisis that are probably out there, but you can buy gold and and have insurance on your portfolio. What's the worst going to happen? Gold only goes up 5% or 10%. It's like making it on your money market. But there is significant profit in putting some money out of insurance and covering. We all remember the Dodd-Frank Act, and it's headed our way. We hear more about that last week than anything else, is that the United States has a law, came in the Dodd-Frank and Obama law, that bails in. Next time there's a banking crisis like we had a few years ago, they'll bail in and keep the money. And it's their money, it's the bank's money, and what you have in there, they're going to loan to you. People say, Tom, you're crazy. No, check out the Dodd-Frank Act and look at it. And you'll be very surprised if you read the details of it, but you get out. But the other thing that's going away with the dollar is the Texas Senate has advanced a bill to develop a streamlined digital currency where anything you buy in Texas, if you have the collateral behind it, maybe you put up a 20-ounce bar, $20,000, and you go and take off of it, your balance is always covered by gold. It's going to be big. It's going to be huge. But it's not going to be too long getting here. I just can't tell you when. But there's a lot of talk. Everybody in the world is talking about a gold standard, whether it's the BRIC nations, it's whether Kenya and all them smaller countries, or the big ones, China and India, all of them are looking at the dollar going down and probably losing its status as the world currency. In fact, that's almost done already. So just remember there's a currency's coming. Could be a Chinese yuan, a lot of talk about it being a go-back currency. The Texas Senate stuff we just talked to you about. Just think if you lived in Texas, you trade with each other in this currency, and you're making money while it goes down, and the money that's not being used sits there instead of just sitting in your banking account. It's sitting there with gold behind it. But keep your eye for that, and I'll keep talking about it so we'll get to the point. But anyway, the potential upside for gold is incredible. When you sit here and say 30-some% already this year, 29% last year, 11% the year before that, and remember, just look at what the bankers are buying. That's what you need to be buying, and that is gold. It's what they're buying for that. So anyway, we got a lot of IRAs today, IRAs. You can call us for gold and silver. A lot of our clients have retired, have taken their 401k and made 2 IRAs out of it, one for traditional stocks and bonds and one for precious metals. And we can be Trip Cloud. My grandson runs that division. He's doing a great job for us. He's been with us now nearly 2 years. So anyway, you can call Trip, and his direct number, if you want to talk about IRAs, is 678-414-8353. And he can talk to you on that. And if you need to talk to me, you can call 800-247-2812. And you can talk to myself or Catherine, my daughter, that also has been with us several years. So anyway, we're excited about the future. We're excited about bringing quality products to you at a quality price. We've always been able to do that and help. And when you're ready to sell it, we'll get you out. And we have the lowest storage rates if you don't want to take possession. If you bought so much, say $20,000, you can take delivery of it, and we pay the postage and insurance delivered to you. Or we'll arrange for you to put it into a bank, into a depository when you want to sell it. All we got to do is send you sheets, you sign it, send it back, we wire you the money. That's how quick you can get in and out of gold and silver. That's how liquid it is today. Well, I enjoyed today catching up. Sure it's going to create a lot of questions for you, and we're here to answer them, but I can tell you one thing, for 49 years I've done this, and I've never seen like it is now, and the 10 reasons I just gave you, be prudent and at least diversify with a small percentage or whatever percentage you want. But anyway, stay in touch and stay with us, and we'll do it. If you're not on our mailing list, just send to Tom Cloud 1630@gmail.com. And then we'll put you on the list and you'll receive our mailings. Anyway, that's it. And I'll be back in a couple weeks with updated information.